What's up, everyone? Michael Manaskanian here. I am very excited for today because a lot of people have requested this. Most people know me as the buy and hold real estate investor, co-living, capital raising, all that stuff. And that's true. But what I don't talk a lot about is I've built a lot of these skills through my previous experience as a wholesaler, where I was directly working with sellers and agents to structure great cash deals and creatively financed deals, as well as the bird dog, where I was working with buyers, understanding what they were looking to buy, what they were looking to buy and how they were looking to buy it. And then working directly with sellers and agents to be able to find and create those opportunities for them. So with that being said, a lot of the skills that I developed during that time was effectively communicating with sellers and explaining things, not just the way most do, where we'll talk about a lot of those things, right? We want to understand the seller's motivation. We want to understand the property condition and the what price they're looking for and their timeline to get the sales done, right? There's a lot of stuff you're supposed to do for your typical negotiation, or the typical calls with a seller to then get information to be able to analyze. But what I do is I go into it a little bit more intentionally. I don't really spend a lot of time and energy talking to sellers or agents unless I know the property has a decent viability, like a decent chance at being an actual investment for me to buy. Otherwise, it's kind of a waste of my time. So with that being said, I'm not typically spamming sellers or agents. I am working with people to find motivated sellers, analyzing the deal first and foremost, and then coming in and stepping in to see if we can structure something that works. And I, at this point, already know what are and are not the possibilities for a property. So we're going to be talking to a seller live. We're going to see how that actually pans out because I don't know her expectations. This is my first time speaking to her. I didn't have a sales price. I just knew she is behind on her mortgage. She needs to sell the property. She's tried to sell it previously traditionally and has not had the ability to sell it at the price that she wants. And now she's behind on her mortgage. So I've ran the deal. Even in the best case scenario, cannot buy it like as a straight creative investment. And what I mean by that is we just take over her existing loan and seller finance the rest with no money up front, no monthly payments on that. It still does not work as a good investment. So that means to me, okay, well, can we buy it then? If it's not going to be creative that way, can we buy it where we take out a whole new loan on the property? Sure. In this instance, it would actually increase the cash flow. I don't know what the hell happened here, but her interest rate is 9.875% interest. That's from the mortgage statement that I received. I don't even know how that's possible. I know that it looks like it was a new build and all that, but like 9.875% in 2023, even when interest rates were at their peak, like they were not that high. And if they were, why didn't she refinance? I don't know any of this stuff. This is the kind of stuff I'm going to ask her and try to understand the situation of the investment so I can try to structure a better deal. But if I was to be able to buy this property using a whole new loan, that 25% down payment is going to suck. So the only real viable strategy is going to be, let's take out a new loan. We will seller finance we're going to take out a new loan, whatever she's going to make, we're going to get back immediately. And she's going to seller finance it to us with no monthly payments. She's going to get that money, that equity some point in the future. Or if it is possible, which I don't know why she didn't do this already, she should refinance the property and then we can buy it creatively. This 9% interest rate completely kills it. If we get this thing down to in the sixes, this is a great deal. We're talking about $1,500 a month of cash flow. If I can add 4 more bedrooms to the property as a co-living investment. That's another thing we're going to talk about. I need to understand essentially what's going on with this property. So that's what we're going to go through with her. I have a whole document. I'll share it so you guys can get insights into a lot of this stuff. So yes, I own over $25 million of real estate. The majority of it is co-living. The majority has been bought creatively financed. The majority, well, actually almost all of it, like the vast majority, I've bought using other people's money, raising money for my deals. Co-living, creative, capital raising, right? That's the super investor blueprint. But I'm very good at structuring these deals with sellers, and I don't just buy deals typically at face value. Typically, I'm renegotiating them and making them even better deals. This is almost every single deal that you see me talk about. It was brought to me by someone else, especially over the last 2 years. And then what I've done is I've negotiated and made it better and better and better. Sometimes I'm taking a property that won't work and making it a good investment like this one. I mean, I can get 20+% cash on cash return with certain deals. This one, we might be able to buy it with very little to no money down and still get 15% cash on cash return and buy a property that was fully renovated or fully newly built just a couple of years ago. So this is one that maybe it's lower cash on cash return, but we'll have a lot of benefits between the low money in, obviously the tax benefits, and then the ownership, the appreciation, and the debt pay down. Other times where I'm not taking something bad and making it good, like a base hit or a double. Sometimes I'm taking a base hit or a double and I'm turning that thing into a freaking home run, like we just did with a previous deal, one that we're doing in Dallas. This property is going to be like 21% cash on cash return. I even broke this one down for you guys in a previous video. So if you want to see that, the analysis and all that good stuff, go ahead and check that one out. But basically, by better structuring the deal, we put in like $20,000 less than we were supposed to. And that just massively boosted the cash on cash return because the cash flow was already high. There wasn't really much I could do in that scenario. It's already just a straight subject to deal, but we were able to structure it where we put in $20,000 less roughly upfront, which is great for me and my partners. It's $20,000 more we can put into another investment. And that investment that we just bought is going to be way higher returns than it would have been otherwise, right? We're putting in less money for the same cash flow. Our cash on cash return goes up. If I'm overwhelming you, this is too many words, go into my free Wealth the Real Estate School community where you can learn all of this stuff for free. If you want to be a great buyer, great wholesaler, great bird dog, capital partner, lender, you should understand this stuff fundamentally so you know you're making good investments and you're not putting yourself and your partners in situations where you guys are moving forward with bad investments. Does that mean that sometimes everything doesn't pan out the way you expect on a spreadsheet? No, that's not what that means. What that means is you're decreasing the likelihood of things going wrong or especially catastrophically wrong, and you're giving yourself the highest likelihood of success in your investing. That comes from analyzing deals and understanding the markets that you're investing in. So with that being said, I'm going to see if we can get the call going right now so you guys can hear about it. Let's see. I'll have it on my phone. Doesn't mean no personally identifiable information. I can screen share a little bit of stuff I wanted to share with you guys anyway. Just kind of how I look at these investments. Let's go here. Excellent. Boom. So I'll zoom in a little bit. And so what I did was I don't want to put any of her personal information out there. So what I did was I went through the property price action to understand kind of what is the situation, why is she behind, like what's going on. Oh, there's a call. So this is one of the calls. This is the guy who's connecting everything. Hey, Edgar.
Hey, what's going on, man?
Is she available?
Yeah, let me join you here.
Thank you. So I just muted that for the time being. So basically what happened is it looks like she listed it for sale for $649,900 in July of 2022. The way I see the records, it looks like she bought the land and then did a whole new build. So from 2021 to 2022, looks like a great property. I do have some questions about permitting and all that, which I'll ask about potentially, depending on if it's even worth going that route, because she might have completely unrealistic expectations. I'm asking her to avoid foreclosure by allowing me to buy the property with, she gets nothing up front and no payments. She just gets something in the future, 5-10 years down the line, she'll make her money. That may not work for her. And I understand that, but there's not really much else I can do to make this deal work for her. There's very little that I can do to make it work and still make it a good investment. I'm here to try to help sellers solve their problems and all that, but I'm not buying investments and just solving someone else's problem at a burden to me and my partners. That wouldn't make sense. I wouldn't be in this business very long. So if I can help her and we don't buy it. Hey, what's up, brother?
I'm not sure why she's not answering, dude. She said she was going to be available. Are you going to be available for the next couple of minutes if I get her on the call?
Yeah, definitely. I'm just going to mute you and then just get her on the call and let's continue on. Okay.
Well, I'll call you as soon as I get a hold of her.
Okay, that's fine.
All right.
Bye. All right, so that's my understanding. She built it new. Oh yeah, there's like not a lot I could do, and her interest rate really makes this not favorable, even with creative financing. And she's had some really crazy expectations for the property and where she's at, especially now that I have her mortgage statement. I know how much loan she has on the property, around $430,000. She could have dropped this much sooner at any point and sold it. So why didn't she? I don't know. Because if she just wanted her cash up front, she should have sold it. Now she's got probably little to no time before she loses this thing to foreclosure. She's already behind on mortgage payments. I assume she's not going to be able to catch it up. So if I can help her solve this problem, it's got to also make sense for us as investors. And the problem is the numbers are really tight on this deal. But this is what I did. So I went through and cleaned up her property price, action ownership. You could find this on Zillow, Redfin, whatever. Took this list from information they had available, looked at some property records, and noticed that it was bought as well. I looked at the property taxes and noticed that it got a massive boost in what the assessed value for the property taxes were, which typically means to me that it was a fully new build property. I confirmed that 2022 new build. So she bought it, bought the land, built the property. I don't know how she financed it. Like, she used her own money, she used hard money. Like, what did she do? I don't know. Then she refinanced it to long-term debt. The long-term debt is terrible. It's like a 9-point-something% interest rate. It's actually insane. I don't even know how that's possible. To be that, let's see, what is it at? And we'll get into the spreadsheet now. Yeah, 9.875% interest rate, $430,000 loan. That's now at $422,000. And that was as of August, so it's a little bit behind. That's the interest rate. Crazy. That's like insane, that interest rate. So much of our money is being wasted on interest. It's like so crazy. All right. So it's like, why did she not refinance? I know interest rates were still fairly high, but they've always been lower than this, even for just a DSCR loan. She have a prepayment penalty? It's a good question. I'm going to put that in some. So I put some of this stuff in there. Can't refi due to pre. So I like to do my research and have my questions beforehand, so then I know some of the key things that I want to talk about. I want to understand her overall situation. Like, how'd she get here? Why is there such a high interest rate? Why not refi? Oh, it's going to go right here. Can't refi to do prepayment penalty. Maybe she doesn't have the income. Like, she's not like credit worthiness. Like, she just can't qualify / income. But then if it's a DSCR loan, then that wouldn't necessarily matter as much. What would matter is DSCR loan requirements. Like, what's the deal with this loan? I don't even know how she could have gotten into something like this. How does she fall back in payments? Why not previously lower the price just to get it sold? Because I know she has less than $430,000 of equity or loan on it. So maybe she spent more than that and she's maybe in the whole $500,000 or something. But like, when this didn't work, and then you remove it after a couple months, and then you list it for $30,000 less, and the market just completely flipped. And a somewhat savvy investor, myself included, I was like refinancing and selling properties by this point, because this was when there was an inflection point with interest rates. Interest rates started going up and up early 2022 and really went crazy by the end of 2022. They were much higher. So like, why didn't she see the writing on the wall that as interest rates go up, property's going to be worth less? So if this isn't working, do faster price actions or refinance to a lower interest rate, so at least you're not spending as much monthly. But then she had a big drop, right? 30K drop here, then continued lowering the price. This is lowering the price during the same setting. Dropped it. Like, she didn't have a big drop, but she relisted it a year later, which is probably accurate. The property value, if she thought it was worth this much, didn't really go up or down much during this period. I just think, obviously, if it didn't sell then for this much, it's probably not going to sell for that same amount in 2024 because interest rates were roughly the same. She dropped it a little bit, but just enough to move the listing, give it a little bit of activity, and then relisted it for real again, but with a massive price hike. Why did I say 14 months later? Maybe I was confused. 14 months from the last time. Yeah, but whatever. Just relisted it later with a price hike. She increased her price. Then went back to lowering a little bit. I don't know really what happened here. I think there's just an error. Yeah, this looks like an error. And that happens for sure on these online price listings. Removed it again and listed it like, I would say, is this like her bottom line sale price? $567,777. I mean, she did drop it 30K from the last time, then dropped it a little bit more. So like, this is her new bottom line, and then removed it. Like, what's going on? If you need to sell this thing and you know you're going to be behind on payments, why not just drop the damn price to get this property sold? It's always one thing if a property's not selling. It's the price. There's always a price in which someone will come in and buy the property if it's at the right price, even if they have to renovate it, if it's awkward or ugly or whatever. If you set it to the right price, someone will buy it, regardless of interest rates and all that. So why didn't you just lower the price to get this thing sold if now you're about to face foreclosure because you couldn't sell it? I can't answer that. What I will do, since we're waiting for them, is I'm going to go through my best estimate of things and my analysis of if I was to buy this purely as like the most optimal creatively financed deal that I could do, taking over her subject to loan for how much is available, and then seller financing the rest with no down payment, no interest rate on that, no payments on that. And so let's do that. So if you're not familiar with my Super Investor Real Estate Calculator, it's a monster that allows you, like, we don't use it like this, we zoom in, right? But it's a monster that allows you to analyze deals, whether it's, here we go, various ways to acquire the deal, hybrid creative, so if it's subject to and seller finance, just subject to, just seller finance, Morby method, where it's a new loan plus seller financing, traditional and cash. All of that in here in one calculator. On top of that, I've got 4 core management strategies that are listed in here as well. Long-term and co-living, my 2 favorite, but I mean, co-living is literally my number 1. It's not even comparable. Term rentals and short-term rentals. These are all strategies that I've done. Every acquisition strategy I've done. Every single management strategy that I've done. I still go back to the core super investor blueprint, our cheat code, really combining creatively financed deals with the co-living management strategy and then buying them using none of our own money. That's what super investing is about. That is how I've gone from my first property 5.5 years ago, a 2-unit, a duplex that I bought using my VA loan, and then now own over 100 rental, well, probably close to 200 units now. A lot of those being co-living, but basically a $25 million portfolio from 0 to 25 million in 5.5 years. All of this was necessary. The creative financing, the capital raising, and the co-living to have been able to do everything that I've done in the time frame that I've done it. And it's combining all those things and doing it over and over again, and having a very robust calculator makes that easier, because then I can analyze a property, the various ways to buy it and the various ways to manage it. I have a free version for you guys in my free Wealth the Real Estate community. If you don't know what I'm talking about, you definitely should. It's a massive value to you. Let's see. I'll drop it in the comments if you're not in it. I have free trainings. I have all this free stuff for you guys. I'll just drop it right there so you can see it. My Instagram friend's always mad because they don't get to see this. So let's drop that in there for them. All right. Let me see if I'm logged in under this account. No. All right. Sorry. I can't show it off. Sorry, guys. Well, I could show it off. Here's how I'll show it off. Just so you can see what's in there for you. I have all these calculators and tools. I have a free version of this calculator. It does all of this stuff. It just doesn't go into the capital raising piece, but you probably don't need that to start off. And if you do, then I've got a ton of ways for you to get that. All right. So I'm going to just show you very quickly. Perfect. So Wealth the Real Estate, right? There's a community discussion. There's 1,900 people in here. It's always more people are coming in. I share a bunch of stuff. People comment, people celebrating deals. I mean, it's awesome stuff in there. But more importantly, for a lot of you guys who say, I don't care, I don't need more community, I don't need more conversations with investors, you're wrong. But there's a bunch of trainings in here for you as well. Real estate investing as a whole, traditional, creative, co-living beginner's guide, bird dogging. I give away the first whole part of my Super Investors Mastermind community, Financial Freedom Blueprint, so you can effectively get your personal finances straight, your budget, your net worth, and then actually roadmap your journey to financial freedom through real estate or whatever assets you choose to do. I think that's so important. I just give it away for free. A whole thing that my super investors pay for, you guys get for free, plus some additional things. Not everything is fully launched, but my A to Z co-living course is launched. You can officially go in here, you join the community for free. You can upgrade for $197 a month and get access to one of the best courses out there for co-living, 16 plus hours of everything you need to know for co-living, including a variety of deal analysis trainings. Like all these are fully in-depth trainings with all the tools and resources, the co-living workbook that you get access to. Oh, that's weird. It didn't show up that way. There we go. The entire CoLiving workbook, which gives you literally everything step by step. I mean, I don't know who does this stuff. I'm an engineer by trade, so this comes more natural to me. And then your 90-day roadmap as well. So all that's included in there. And you also get access to live calls. You want help with analyzing CoLiving deals, helping understand how many rooms could be added, talking to my operations people, my asset manager, my operator, to then learn what are they considering on a property, right? You have questions about the renovations, the cost, resources, the budget for that, furnishing questions, management, getting your listings live. Like there's nothing comparable to this. And I'm offering at $197 a month. Cancel anytime. You're more welcome to join in here and get access to all of this. This also comes with a full version of the Super Investor Real Estate Calculator. So you get access to all that as well. But for the majority of you, don't worry about paying anything. Just come and take advantage of all these free trainings, tools, and resources that I have in here for you. That's all I really want, is to help you guys on your journey as much as possible. All right. With that being said, let's get back to the calculator, because I want to explain what I've done here. So we're going to do share screen. We're going to do the window. Boom. All right. So with that, all right. So what I did was I said, if we buy this property, oh wait, one more thing I just got to share. The calculator also comes with this CoLiving tab, where a lot of people are like, hey, this is cool that you estimate, well, this one I increased because of the type of conversion, but like there's I think it's like $6,000 per room conversion, $1,500 per room to furnish for the total house. And it helps you automate some of the stuff to help you with like instant and quicker deal analysis. But then there's like the full breakdown of CoLiving specific renovations and the costs associated with it. All general property renovations, some costs associated with it. It obviously depends on your market and all that other stuff and how much work that you're doing. Plus the entire CoLiving furnishing checklist, every single item that we include in our properties automatically plugged in here for you. And it does it by like the number of rooms, all the extra amenities that take your property to the next level, a lot of stuff that we do, just makes a lot of this more easy. People ask me all the time, how have I been able to do as much as I've done in the time frame that I've done? It's by understanding this stuff, leveraging the Super Investor cheat code, and also creating all the right systems, tools, and resources to maximize my time. I shouldn't be spending time figuring this out every single time I'm trying to furnish a property. So that's why we have a lot of this stuff there, to make it easier and more accurate on every single deal, so I can spend the time and energy focusing on the things that matter the most. Finding great deals, raising money for those deals, and then ensuring we're successfully operating them with the least amount of wasted time. All right, so the analysis, let's zoom in. So I'm assuming, right, she has this $430,000 loan that she pulled out initially. It's at the, let me see. There we go. All right, excellent. Hey, we good?
Yeah, we're good, man. I'm going to merge her on the call. Her name's Elizabeth.
Perfect. Thank you, brother.
Hey, Elizabeth.
Sí.
Hey, I just joined you aquí con Michael. Michael he's an investor that has several Petwood properties. Michael, you're on?
Yes. Hi, Elizabeth. Nice to meet you.
Hi, Michael. Nice to meet you too.
So I don't really know a lot about your property. Would you mind if we just start with understanding kind of the journey of your ownership? Did you buy this and then build it brand new?
I bought a lot and then I built the house.
Okay.
From the floor, yes.
And then did you live there or did you rent it out?
Now I live in the property, yes. I try to sell since I built in the beginning. I built the house. I tried to sell. Then in that time the house come, the appraisal come in 620 when I refinance. And then so I listed for 619 and nothing. Maybe one of the problem is because I go back and forth with the listing. I remove, I release, I remove, I release. and maybe this make like worries or I don't know. And then the market come and then come out, and so I don't want to sell too low, you know. At that time, I say no, because why I have to lose too much money, and then many things is coming on. And as a realtor, because I am a realtor as well, as a realtor, my income go low, and so I start delay payments, and many issues coming in my life.
Got it. Well, I'm really sorry to hear about that. All of it. I mean, it sounds like it's a perfect storm of kind of bad things, unfortunately. So I'm very sorry to hear about that.
Exactly.
And then,
so much.
So my question always, especially,
like, okay, after I would like you to see the kind of property it is. Edgar know the property. Maybe he talk a little bit, but something else when somebody tells you talking about the things, but another is when you see personally and you can judge by yourself what kind of property it is.
Right. And it looks beautiful.
You really like it. Okay.
I did see the videos from Edgar. But for me as an investor, it doesn't make much of a difference if I can't make it make financial sense, right? I need to make more money than I spend each month. And then on top of that, I need to make sure the amount of money I put into the investment is like the amount of money, the cash flow I make each month is justified by the amount of money I have to invest. That's the most important thing before I ever go look at a property, because honestly, 95% of the properties I look at, they're not good investments. They're just properties for sale. And usually they're overpriced, or they don't have the right terms to make it work, right? Or it's just too expensive or whatever.
Yeah, as it is right now, because I have the very high interest rate. So it's very, even though it's with CoLiving, maybe it can be reach the money to pay, even they now, because I pay 4,700, but when Edgar tried to help me to refinance and everything, he said 3,700. I tried to do in another ways as well, and they say it can be between 3,700, 4,000, and
so then why didn't you refinance? Because that is a really high interest rate. Like, why is it such a high interest rate? I've never seen a 9% interest rate.
I don't know. Maybe I don't put attention in that. I'm not study the panorama they showed me, and I accepted.
Is it because you thought you were?
It's a like a investment loan. That's why they charged me 9.7.
Did you think you were going to just sell it really fast and so you didn't care, or were you planning on holding it at that point?
¿Qué me dice, don Edgar? No le entendí. Hello?
Yeah. Edgar, are you here? Oh, maybe he dropped off. Well, I mean, he's here. I just don't know.
Oh, sí, estoy aquí, sir.
My question was basically like, did she think she was going to sell it really fast so she didn't care about the interest rate, or?
Sí, el interés no le importaba al principio porque pensó que se iba a vender rápido la propiedad.
Exactamente, sí, exactamente.
Yeah, that's right, Michael, because her thought was that she was going to be able to sell the property quickly, so she didn't mind that interest rate.
Right. That makes some sense. I mean, okay, so can we talk about why you didn't or couldn't refinance? Is there like a prepayment penalty? Are you not able to, like, because this is a really high interest rate and really high payment, and interest rates are obviously, Edgar, interest rates are a lot lower than this, even at the peak over the last couple of years. Like, why is a refinance not occurred at some point over the last couple of years?
Le puedo decir, Elisa, me está preguntando que por qué no se ha podido refinanciar la propiedad, y una de las cosas fue su crédito, ¿verdad? Su credit score. Yeah,
Una es del crédito mío, la otra que se iba a hacer a través de mi hijo es porque mi hijo, dígale que yo tengo 3 propiedades y la otra está entre mi hijo y yo y el crédito es de mi hijo. Entonces tampoco lo que mi hijo representó en los taxes ayudaba para él agarrar la otra casa sin dar un down payment.
Yeah, so their credit score is not great. So
Yeah.
That affected them in the decision to be able to refinance.
So they just couldn't refinance, essentially.
Right.
I mean, that's basically what it was. Is that still the case? I mean, I assume it's probably worse now than before. Between being an agent and all this stuff going on.
Yeah, her and her son are partners as well, and the idea was for her son to be able to refinance the property, but he also got in a situation where he was not able to refinance due to the other properties they had acquired.
Okay, no, that makes sense. Okay, because I was gonna say that might be one of the options for her to refinance, and then we talk creative. But okay.
Tú le puedes decir, sorry, Michael.
It's okay.
Been, asking, Don Edgar, tú le puedes decir a él que cuando tú viste el score mío, el score de mi hijo, o eso que era de 680, tampoco era tan muy excelente, que tú encontraste un pago mensual de 3,700. Eso de pronto le puede ayudar a él, que tiene un mejor score, pues puede quedar con ese pago.
Yeah, she's just talking about when we were initially looking at refinancing under her son's name.
Mm-hmm.
He had a 680 score, and using that, they were going to be able to get like like 3,400 or 3,500. I don't remember the exact amount for monthly payments, but that didn't go through. So
okay, so we won't focus on the refinance, but that's why she didn't do it, is because it wasn't possible. Do you know if the existing loan, Edgar, has a prepayment penalty as well? Because it's not been.
Dile que tú lo viste y no tiene eso.
Yeah, I don't think it has a. I can't 100% confirm if it has a prepayment penalty, but we don't think it does.
Okay, that'd be something to verify for sure, because that would also limit the options to sell or refinance early, because then that would just add more and more costs on top of everything.
Okay, we can call the mortgage lender and see and double check.
And then, so like my obvious question, in my opinion, and you kind of said it, Elizabeth, but you had it listed for $649. You said it was appraised for $620. Then you lowered the price to kind of $620. Based on your debt amount, why didn't you just lower it a lot more, a lot sooner to sell it?
550, maybe 545.
No, like, why didn't you do it earlier to sell it before everything? Like, I see 559, so $560,000 was the lowest you listed it for. Why didn't you list it lower sooner to sell it, especially as an agent when interest rates were going up and everything was just getting worse and worse?
Because even though I'm going for 400, not anybody offers right now, nothing. So at this point, I prefer not to list it anymore, because I have a friend who, sure, the house is old house, she rehab, but the appraisal come for 430 something, and she going even 350, not anybody offer nothing. So I say, I'm not going to do this, show this number, ridiculous number. I prefer to keep it. I am still working. I appreciate Edgar bring you to me, but we are still working and knock doors and doors and doors to keep, to save the house,
Yeah. So currently, so you took it off the market in September, and I saw on the mortgage in August, it was behind, right? Mortgage payments. Are you able to make your payments, or is it still just more and more behind on like?
I am more and more behind. Exactly.
Have they started the foreclosure process already?
Not yet, no.
So.
And we working in solve all these problems.
Right.
Because I have another property with equity 300. We try to work. My son is trying to work in HELOC the way we can take the money to put in this one.
Yeah, HELOC.
If I don't find somebody to buy or to come in a partnership and you know.
Right. No, that makes sense. I understand that. The trouble I'm seeing here, yeah, the HELOC's gonna be tough if his credit's not good because they really care about that for a home equity line of credit.
No, because I talk in the HELOC, I'm not going to do. It's my son.
Yes.
And the other because as I told you, we have 3 properties, but 2 of those is one is the one we talking, the other one is have 300K
Equity.
Equity. Mm-hmm. So maybe we can work in that one.
So you would sell that one or pull money out to then be able to just make the payments on this one and catch it up before it gets okay.
Mm-hmm.
I also saw like taxes were up to date because I just look at everything for a property, but there's $2,103.19 coming up for the tax payment in November. Are you going to be able to pay that before they add a lien on the property?
No entendí esa pregunta.
There's
va a haber un pago en noviembre de los taxes de 2,000 y pico. Sí va a poder pagar eso, porque si no se paga eso, el gobierno va a ponerle una lien.
Sí, toca pagarlo. Y no se supone que, claro, como no se han hecho los pagos, sí, entiendo.
Yeah, so her plan is to pay it, Michael.
Yeah, because that's going to be even faster. I mean, she'll have the lien, but I don't think they're going to foreclose on her. Faster. I mean, I think the thing that's going to her ticking time bomb is the arrears on the loan itself, and it's like massively increasing, and interest on all that with the non-payments. I mean, that's just going to get. I can't even imagine. I mean, I saw what it was before. I can't imagine what it is today. 3-4 months. What's it? Well, how many months is that? 2-3 months later, like it's over $20,000+ at this point, I would assume.
¿Sabe cuánto debe ahorita? ¿Está atrasado de los pagos, Elizabeth?
20,000, yo creo decir, el último recibo que llegó fue el que te mandé, 22,000 $.
Yeah, 22,000.
Yeah, and then another mortgage payment. Well, it's November now, right? So in a couple days, it'll be another one. Okay, all right. I want to help her. I just need to. Okay, so Elizabeth, what's your overall goal with the sale now? I mean, I know you said you're door knocking. You've listed it and took it off, so that's not going to work. You're talking to a couple people. Like, what are you looking for now in this situation? Because you said you don't want people to give you lowball offers. I just need to see what you're looking for and if it makes sense for me as well to be able to buy. Really, that's the question. It's like, what are you looking for?
Dígale que me gustaría o que venga con como si quieres ser un socio y ser parte pues de como que la casa fuera de los dos, pues como dividir, ponerle un precio a la casa y dividir lo que hay de equity y colocar la mitad y que la casa pues lo que genere se pagara, ¿no? Entre los dos. La otra, pues, que me hiciera una oferta basado en lo que él tiene en su cabeza, me hiciera una oferta y yo la estudiaría.
Yeah, so she's open for 2 options, Michael. You know, one option would be a partnership structure. You know, she's open at a partnership structure, or just saying, hey, you know, what type of offer you would be able to present to her. In order for you to buy it from her.
Okay, I don't really understand what a partnership offer is in this sense. But the real question is, it doesn't really matter what I want necessarily. I just need to be able to analyze the deal based on what she wants and see if it makes sense for us. If it doesn't, I'll give her a price after that might make sense. But like if she wants a really high price or a lot of money up front or whatever, it's going to kill the deal because of the really high interest rate. So it doesn't really, you know what I mean? It doesn't really matter what I want because she has to be the one to say yes to it. I'll just analyze it and see if it makes sense for me after. So like what sale price has she been thinking of? Since obviously she didn't want to drop it a lot more than this. And obviously this doesn't make sense. Even at creative, like assuming a perfect creative scenario where there's no down payment, and there's no monthly payments on the seller finance loan, right? There's seller finance, but it's paid out at some point in the future. Taking over this property subject to, it still sucks. Like even with CoLiving, assuming I could add 4 more rooms, which I don't even know if I could add 4 more rooms based on the size and like the 2 stories as opposed to 1. So like I need to understand kind of what she's looking for. And I could immediately say, oh yeah, that's just not going to work. And that's fine. Because then at least we'll both know that maybe go a different direction. Like I'm not the buyer, I guess.
Sí, Elizabeth, si le puede dar un precio que usted tenga en la mente de que dijera, oye, te la vendo a este precio, eso le ayudaría a él bastante para, ¿verdad?, analizar la situación. Y en lo que es la asociación, el partnership, Michael, one piece I left out when it came to partnership is whether, you become part owner of the property and you have a % of equity and you're able to catch up the arrears. And then from, like structure, that's what she meant by partnership.
Right.
Okay, you come in, catch up the arrears, you become owner of the property now, whatever that equity percentage you guys agree upon, whatever percentage of cash flow you guys agree upon, she would be open to that type of partnership structure. That's what she meant by that.
Right. I mean, I guess I should have been more direct. I do understand essentially what she means in that sense. I don't understand like, in this instance, right? Like typically it's just better to not do any forms of partnership in general, right? It's just, it's more difficult to make that successfully work, especially because now then you have to split the little bits of profit that there might be with someone else, which would make it really tough. Because in this instance, there would be little to no money that could be paid out outside of closing costs and the cost to renovate and convert the property. And that already is adding a lot to it. And that's going to really drain any viability, any ability to like share or spread any profits. So that it couldn't be a scenario in which that's the case. The deal isn't good enough, like the property isn't good enough to generate the returns, nor is it good enough to be able to split that and then make it make sense for anyone, I guess. I mean, I know how it solved her problem, but it
doesn't, it's not a win-win, right?
It's just like, hey, I know we solved the problem, but it's not like, why are we doing all this?
La compra que él ofrece, por ejemplo, en la compra que él dice, ¿verdad? Es una compra normal, pues que él adquiere un préstamo para comprarla y él paga la deuda y luego me da lo que el excedente que se queda, o cómo es que funciona. ¿Qué es lo que va? ¿Cómo es lo que él cuando él me pregunta en cuánto es que yo dejaría la propiedad en este momento para venderla y que se haga pudiera ser un deal? Es como una compra común y corriente, una compra pues que se hace él adquiriendo un préstamo, pagando la deuda que hay y dándome a mí el excedente que queda.
Yeah, she's asking about the purchase price. She that you ask about, Michael. It's like, hey, what would that purchase price be? She's wondering if you're going to be buying it like through a loan product or
yeah, I mean, it becomes irrelevant at a certain point, only because it doesn't work as a regular new loan. I did the perfect scenario for creative finance. Essentially, if I bought it at $500,000 and I just took over her loan and the rest was seller finance at 0% interest rate, the property, even assuming you could add 4 more rooms, would cost me an additional $112,000 to get into, and I'd be losing at least, if not more than $320 a month, because the loan is so bad on this creative deal. So if she's not willing to sell it that low,
keeping the existing loan in place, right?
Right. So like the perfect creative scenario doesn't even work in this scenario, and it would have to be with a new loan or a refinance, but it'd still have to be creative on the back end. But the main takeaway is that there'd be little to no money for her up front and little to no money paid monthly. The basics understanding here is that she would avoid foreclosure, right? Not further wreck the credit, not lose everything. And then she'd get some payout at some point in the future. There's just no viable way for me to structure this, new loan or not, that would allow her to make really anything upfront or monthly for the foreseeable future, which is why it's really important to understand what her real goals are, because it may not make sense and maybe she's better off. I don't know. Like, you know, I don't really know because it really depends on the credit worthiness.
Yeah.
Well, yeah, obviously always find another buyer, right? Yeah. That's kind of what I wanted to understand from her perspective. Because what I did was I modeled the Morby method, right? And it doesn't really matter what the purchase price is as much as like that's the equity she'll get in the future. But basically, what price could we get the property at to take out a new loan that then there would be enough equity given to her up front to then be seller financed back to us to cover all the down payment, essentially, that 25% down payment. And basically that purchase price was $575. We would take out a new loan at $431,250, ideally at 6.5% interest rate, if that's possible. And she would get no payments and no upfront capital. And she'd get a payout 5-10 years down the line on her equity. But that only works if she's more focused on avoiding foreclosure. But if she's expecting money up front or monthly, it just isn't a good property for that. It's too expensive with new loans, and it's too expensive with new loans, and the existing debt creatively sucks. So like, you know, it's a net negative to buy this one creatively, you know, at least as a subject to deal. And this is assuming I can add 4 or 5 more rooms. That's the crazy part. And I don't know if that's viable. I don't even know if that's possible.
It's possible. I mean, it has downstairs where the garage is at. There's definitely space for additional rooms.
But there's no point of us going too far into the weeds of that if she's not cool with the structure, right? Because who cares?
Right,
like
right.
This we'd have to talk about the structure first, and more importantly, understanding, hey, like I can't, like, you're gonna make your money at some point in the future, but really what we're doing is solving the foreclosure that's about to happen. That's inevitably about to happen unless you could sell it quickly to someone else and get whatever terms that you want. This is really the thing. It's like it's going to be delayed because I can't make it work any other way. There just is no possibility of making it work any other way. And that's assuming we can add 5 more rooms, which then is the next step, because I can't guarantee just because she's open to these terms that we can still get the deal done. I need to send a contractor out. I need to get actual quotes to verify this stuff.
Right. Elizabeth, ¿sí comprendió la conversación?
No, algunas partes sí, pero me perdí en varias. ¿Me explicas, por favor?
Sí, lo que él estaba explicando es de que de verdad es difícil, ¿verdad? Para estructurar un préstamo en donde él también como inversionista pueda hacer el retorno de lo que se va a necesitar para añadir las habitaciones, los cuartos, ¿verdad? Convertirla bien en un CoLiving que se necesitaría añadir tal vez 4 o 5 habitaciones. Entonces lo que estaba diciendo, dice, él puede estructurar algo en donde le pueda ayudar a usted, beneficiarla, en donde usted no tenga que ir por el foreclosure process.
Uh-huh.
Pero ese tipo de estructura nomás le va a ayudar en eso, ¿verdad? Que no va a tener que ir al foreclosure process y en el futuro usted va a poder agarrar cierta cantidad de dinero de regreso. Es negociable, pero no va a poder recibir cierta cantidad de dinero upfront. Al frente, a la hora del cierre.
Yeah, and that's why I say, like, it really matters about what you're looking to solve and if I can help you solve that. But I may not be the right buyer because, like I said, it needs to be an investment for me. In my opinion, if you wanted, like, you just sell it at a lower price to someone else who's going to buy it to live in it. I don't know what your window looks like, how much time you have available to do that, or if you're willing to. But the way I'm looking at it, you're going to lose the property, wreck your credit, and lose any of the equity that you could get at some point in the future. The only way I could barely make this work is if you get nothing up front, no monthly payments, and at some point in the future, we give you equity. Like, I mean, you get paid out at some point in the future. That's the only way I could barely make this work, and it may not work for you.
Él puede, o sea, me puede pasar usted con lo que él le dice, me puede pasar por escrito eso para yo entenderlo más, por favor. Y que mañana volvemos a tener otra charla. Si él ahorita en el transcurso después de la llamada, porque yo estoy acá en otra oficina, Si me pueden por favor enviarme eso por escrito para yo analizarlo bien y que mañana tengamos otra charla, por favor.
See, Michael, she's asking if we can put some sort of like a framework of what you're proposing.
Yeah, I mean, I could say it right now, just more simply, but it doesn't really matter unless I can add 5 more bedrooms to the house. So that'd be the next step. But the number one thing that I need her to understand before the whole framework and all that stuff, because it doesn't even matter at that point, would she be willing to sell the property and make no money at the closing? No monthly payments are being made, but then she gets, some equity, 50,000, whatever, 5-10 years down the line. Would avoiding foreclosure and going that route make sense for her? If not, then there's no way I can make it work anyway. So there's no point of all the other, then we got to explain everything else in detail, which gets confusing. The real thing she needs to see, I guess, or understand or be okay with is that if we could buy it and make it work in the best case scenario, right? That's assuming I could add 5 more rooms and it cost me not a ton to renovate. If I could do that, she would be getting no money at closing, no monthly payments, and she wouldn't receive any money until 5 years or more down the line. If she's not okay with that, then I obviously can't be the buyer. That's the big thing I want to highlight.
Okay, so a ver si estoy entendiendo, lo que él dice es, entonces yo le cedería la casa, todos los derechos de la casa, no recibiría yo ni un peso, él solamente pagaría lo que se debe y de pronto en un futuro, dentro de 5 o 10 años, yo voy a recibir quizás un equity. ¿Eso es lo que está diciendo?
No es quizás, el equity todo va a estar escrito en contrato, entonces lo que ustedes negocien, eso es lo que usted va a recibir en equity. Sí, en un futuro, tal vez sean 5 años, tal vez sea más pronto, eso es negociable. Pero sí, eso es lo que él está proponiendo.
Pero no el equity que tiene la casa hoy, sino ¿cuál equity?
Ese monto se puede negociar, ¿verdad? Usted puede decir, oye, quiero esta cantidad de equity en el futuro, y él va a tener que analizar si ese monto es algo viable para él.
That's what I really want her to. That's the thing we have to come to agreement with, if it's going to work at all for me, right? It doesn't have to. If it doesn't work for her, it doesn't. That's fine. I'm just seeing the situation and trying to solve it. And the only way I could barely make it financially work is if I take out a new loan. When I take out the new loan, we're going to pay the down payment up front. But that money that's going to go to her at the sale, we have to buy it at whatever the most we could possibly buy it for. Whatever money goes to her has to then come back directly to us. And then we will pay her back a portion of that in the future. We just need that to cover some of the entry costs. If that is the case, that could maybe make this deal work if I can add 5 more bedrooms. But the big thing, if we take all the complexity out of it, is she willing to sell the property, avoid foreclosure, all that kind of good stuff, get it done as soon as I could possibly get the DSCR. But remember, the DSCR loan may not work out either, because it depends on, does it meet the DSCR coverage ratio, right? Do we get it appraised at the right amount? But if I were to buy it, would she be willing to sell it with no money up front? She'd get no money at closing. She wouldn't have to pay closing costs. We'd cover all that. She'd get no money at closing. She'd get no monthly payments. And that barely allows me to make enough money to make this work, assuming I can add the extra bedrooms and all that good stuff. So then she would have to get her money at some point in the future after we're able to pay down the debts, have the property appreciate, pay her down based on the equity at some point in the future. We'd cash her out. So it'd be, is she willing to forego any payments up front and monthly payments for some equity in the future, which then is what we'd really negotiate.
No, Neda, no, para mí esto no es conveniente de todas formas. Muchísimas gracias. Thank you very much, Michael, for the conversation and for everything you say. But I think it's not going to work anyway.
Absolutely. And that's why I want to clarify. Okay. I don't know why in this scenario you wouldn't just sell it to someone else for a lower price and just get your money up front to someone who wants to live in it. That's your best case scenario. Because I know you say refinance.
As I told you, my son and I, we still working in different situations to find the way he can buy.
Yeah.
So, but I really appreciate you for the conversation, for your time to propose all this. And también a usted, don Edgar, muchísimas gracias. Me llama más tarde y también tengo algo que decirle. A ver, pues mi hijo y yo estamos trabajando de otra manera, como te dije, para ver si le cogemos plata a la otra casa. Entonces, a ver si usted tiene esa forma de que podamos trabajar.
Okay, está bien.
Okay.
Hablando. Thank you, Michael.
Hey, thank you. I wish you the best of luck, and I really hope you guys can refinance or sell it before, obviously.
Thank you very much, Michael, for your time.
Thank you. Good luck, Elizabeth.
Thank you. I really appreciate it.
Bye, guys.
Muchas gracias, don Edgar.
Bye.
Bye.
Hey,
Bye.
Edgar. Let me call Edgar. Let me explain to him what happened. I'm going to give you guys a little summary. Hey, Edgar. Yeah, this is what I mean by I can't, at the end of the day, it has to work for me as a buyer, it has to work for a seller. If it works, we buy it, right? And then they sell it. If it doesn't work, it doesn't work. I mean, I ran the numbers. You wouldn't believe it. I mean, I've got multiple spreadsheets. I've analyzed it every which way. Buying it creatively, it's just a terrible investment. Buying it using a new loan is a terrible investment because of the amount of money you have to put in and how little cash flow you generate. And she'd have to offer it at such a low price, much lower than she's, I would assume, willing to. And then going the mortgage method would allow her to sell it at a higher price and get more equity. But in the future, and that's why I was trying to get to that point. I don't think she understands the reality of what's about to happen very soon, since they were what, 4-5 months, like three or 4 months behind in August. I mean, I feel really terrible for them going into the holidays.
Oh, I know, man.
But I can't, you know what I mean? That's why I say I can present the deal that would actually make sense for us. And I went literally assuming the best case scenario. In reality, it'd probably be even worse terms than I shared, only because this is assuming I can do 5 more bedrooms. I can split the bathrooms and add at least 1 or 2 more from there. And then my rehab is within budget. I really went a little aggressive with my underwriting just to see if I can squeak something out for her because of her situation. And I feel very bad for the situation they're in, and a refinance earlier would have solved some of these problems for them, or just selling it. I mean, this is the problem. I mean, you deal with it. I deal with it. When people are unrealistic with what their property is worth and they're facing foreclosure, it's like, I don't know what to do for you. And I can't. All I can do is present what could work potentially for me.
Yeah, that's what I had told her earlier on. I was like, hey, from an investor's perspective, I mean, it's priced high, and even putting in,
even a homeowner's perspective, right? Like, obviously, right? Because
hasn't been able to sell it.
Exactly. It's like there's one thing that leads to why a property can't sell. It's always price. So she didn't list it low enough for anyone, investors or retail buyers, to buy it for 3+ years now. She's facing this, and she's still kind of doing this. It sucks because she's an agent, so she thinks she knows better and all that, but it's going to be really bad. I mean, but it is this is the reality of it. So I hope you understand. I'm not here to lowball or whatever people. It's just, this is the reality of a terrible property and situation. Yeah. I mean, all right. Well, unfortunately for her, if she does want to sell it to us in the future, it's going to be at even worse terms. She's going to be in even more arrears. That's going to eat into her future equity. So, and there's going to be more urgent, because the thing is, the fastest route would be for her to do the refinance, right? And then we buy it creatively. We can't, if we have to buy it with a new loan, that's going to take longer than if she did a refinance. So there might even be the time to do this, because these people unfortunately wait until the week prior to say, okay, we'll do it. And it's like, well, now what? Now how do you expect us to do it? Like, it's already too late. And I wouldn't be willing to pay back her arrears with a lease option, and then we buy it. I wouldn't be willing to do that in this scenario, especially if she's living in it and the attachment that she has. It would be very difficult. I think it'd be very difficult to do that with her. So I think, I hope her son can do the refinance or something.
Hopefully her son can pull money out of that other investment property they have, but who knows if it's really $300,000. She's been kind of delusional for a bit.
Well, that's the thing. If you say it's worth, that's why I tell people your equity is not what you think it's worth versus your loan balance. It's what it's actually worth. Like, I could say it's worth $1 million. Oh, cool. I've got $500,000 of equity. No, it's what it's actually going to sell for. Just because you got an appraisal at 620 doesn't mean it's worth 620 if no one buys it at 620, right? Like it's what you sell it for. And that's the reality. This is a good exercise. So I appreciate you, brother. Thank you. Let me know the next time. All right. Bye, brother. Have a good rest of your day. Bye. All right. So simple summary. I mean, I just kind of explained it to you guys. This is the reality of investing. The problem is most people will see this and say, oh, they'll let me buy it creatively and I can take over someone's loan and whatever. But it's like, just because you can buy creative doesn't mean you should, because it still may not be a great deal. As I portrayed here, so I went through this scenario, the best creative scenario that possible. We're buying at $50,000, $60,000 less than she ever advertised it for. She gets virtually no payments at 0% interest. We just take over her loan. She gets no money up front, and it still is a terrible deal. It loses money, even assuming that you have, in this scenario, 4 bedrooms that are here, right, being added on. Okay, great. So what are other options? When I talk about being a super investor, right, my mastermind community, it's not just about analyzing a deal and having one way to buy a deal. Great. Creative in this scenario doesn't work. So what's the other option, right? The other option is buying it traditionally. That didn't work. And I could very quickly, easily show you that. I mean, that was super easy to do. If I were to, basically what we do here, I've already broke the code, so it may not work, but let's see. Oh, cool. It did work. And at oh wait, this is 0. It doesn't work. This one so this is not, because I broke the code, it's not automatic right now, but let's say at 7% interest, or we can say 6.75. So if I bought it at $500,000, 25% down payment, look at this, $125,000 on top of all the closing costs. I mean, we wouldn't need arrears in that scenario because the loan would be paying off that stuff. There'd be some closing costs, maybe even more than this. Yeah, we'll just go kind of bare bones there. Plus the renovations, we're talking about putting in $215,000 to buy this deal. That would suck. But because the loan is much lower, interest rate, and the loan amount is lower because we're paying down a bunch of debt, right? It's not because it's magic low. We're paying it down up front. In this scenario, let's see, first payment date. So this would be, 11/1/2025. This would be 11/1/2025. All this is automated for you guys when you use it. I just broke the code on here to usually just do one strategy at a time and then just make copies of it is what I typically do. All right. So in this scenario, we'd be cash flow positive, $11.36 a month. Why? Because our monthly payment, her payment was insane. I don't know what her payment was, but her payment was, it was this minus the taxes and insurance. So it was this. Oh, wait, the PITI went down, I think. She was paying $46.23 previously, minus the escrow payment. There we go. Yeah, because that, I see. Minus the sum of these two right here. Oh, that's that. So her payment was equals this minus this, $37.29. So we're dropping the loan payment by around $1,300. Hence why we're getting pretty much that same amount minus the negative cash flow before here, right? And positive cash flow now is minus 200 plus 1,300 positive. There's a swing. Now you're positive 1,100. Still doesn't make sense for me. And it really doesn't make sense because we're putting in $215,000 roughly. So we're not hitting my cash flow goals, and we're putting in way more money than I ever invest in any deal to buy it with a new loan. So it's not even great, not great interest rate. And I'm at 6.4% cash on cash return. That sucks. That is how I knew in this scenario, I would have to negate as much of this down payment as possible. So traditional doesn't work. Well, then what's the other creative option? You take out traditional, then you sell or finance this $125,000 back to you. So you pay it at closing temporarily, right? Which costs some money as well, but you pay that. And then after closing, the seller's money, instead of it going to the seller, it's in escrow. And then it comes to you to pay you back for this down payment. Hence the mortgage method. That is exactly that scenario. Well, you need to make sure that the purchase price is high enough that when you have the down payment and you get this money back, or you have to make sure that 75% or whatever the loan to value is of your deal is 75% of this covers the existing loan. It has to be more than the existing loan amount to be able to pay that amount off. And it's honestly, this still isn't good enough. You probably need it like 580, 590. It won't even appraise probably at that value. I saw appraisal, I think within the last year at like 550. So it went from 620 to 550 between when she first built it to now, which is crazy. So this would have to be like, because it's her loan, right? The 420 that she roughly had plus the 20,000 in arrears. So it's like 440, 450 has to get paid off. Plus there's closing costs and all that without her being in the hole. And she's not going to want to be in the hole. But the amount of money that we get left over, assuming this new loan, assuming the purchase price covers her. Well, actually this traditional loan doesn't need to cover her old. The purchase price needs to cover the whole amount, but then you need enough left over to then cover the down payment and to cover your closing costs. Otherwise you're out of pocket. So you can do like variations of this to have made it make sense. I'm not gonna get too far into the weeds of it because even in this scenario where it's 100% financed by her, no money down, no payments, no anything, assuming we're adding 5 bedrooms, even in that scenario, I'm not hitting my cash flow goals. I'm not hitting my cash on cash return. So it's not a deal. It's not a deal, but I want you guys to understand how we got to that perspective. We analyzed it. There's no point in me physically visiting her property to know that. This is assuming 5 extra bedrooms too. The only potential chance here would have been if we can appraise for more and all this stuff works out, we can appraise for more and we get more of this money back, lowering our monthly costs. That's the only thing. Or we bought this, let's say 525, and we're going to get a lot less money back, but this is the amount for the down payment, right? So this is how much we could get back. But it's going to be less than this because this is going to be needed for other things. But this would offset the down payment. So we'd have no down payment still out of pocket. We'd still have this cost for the closing costs, these costs to account for, plus her costs, and the renovation cost. So it's still only 115 entries. So we saved 100,000+ from the other scenario from buying DSCR loan. And we have a lower loan balance. And we just give her roughly 131,000 or a component of that at some point in the future through her equity. That increases the deal returns to make it a deal. But do you see why, even though they wanted a full-on explanation, they wanted all this crazy stuff, it wasn't going to really be possible unless she was willing to understand the only way to make this work is she gets no money up front and she gets no monthly payments. She gets whatever the equity we agree on at some point in the future. The sale price, like none of that stuff really matters if she's not willing to say, hey, they're going to save me for foreclosure. I'm not going to wreck my credit. I'm not going to lose this property for nothing and have to pay a bunch of costs to just lose it. I can get out of this terrible investment that I did and the situation I put myself into, and I can still make money just at some point in the future. But if she's not willing to do that, she doesn't have the right mindset, or she doesn't think it's worthwhile, I can't change that for her. All I can do is present what makes sense for me and my partners to buy an investment like this. And I hope you guys understand that as much as possible when it comes to making your investments. I just said on a podcast earlier, the worst thing people do is buy bad investments. That doesn't mean that sometimes you're analyzing a deal and it doesn't pan out like you expected. It might cost more for renovations. Your cash might be lower than you anticipated. But if you're not doing this level of analysis and you're not anticipating what could occur and could go wrong, you're setting yourself up for failure. And that's where most people fail. They buy the wrong investment the wrong way and lose money on the upfront. They lose money monthly, and then they don't have an opportunity to exit that investment. This is how you prevent that. Clear out your analysis, understand the strategies to buy deals, understand the way to structure it, understand what is not a deal, so you can spend your time on deals that are deals, right? It's a lot more obvious and easy. Usually I don't go this crazy level of work for a deal. It doesn't really make sense to. But I wanted this as an example for you guys so you guys can learn a lot, because a lot of people ask me. I hope you got a deep understanding of what makes me pretty good at this kind of stuff and the ability to work, like solve kind of this stuff in real time. But more importantly, the amount of prep that goes into stuff like this, a lot of this was for you guys. I would just not go through all this. I did this for you guys to make it more, beneficial, but also like, here's the questions I need to understand about what's going on. As you notice, we hit a lot of the stuff. I didn't feel confident in a lot of her answers. I didn't even get into the legal non-conforming and all that, because who cares? She has a non-conforming property even though it's legal or not, it doesn't really matter now if she's not willing to sell at these terms. This is something that's irrelevant. No point of going deep in this right now. Even this was excessive, the tax payments, but she can't make her mortgage payment. She's going to pay taxes now. Like maybe, I don't know. But then get into this stuff. Understand the property. I didn't even verify any of this stuff because it didn't matter because she wouldn't, I just got the stuff from online. It doesn't really matter this stuff at the end of the day, unless she was willing to accept. She gets no money up front, gets no payments until some point in the future. That was really what the crux of it was. And I got there through analyzing the deal and understanding what are the various ways that can make this work. She immediately basically said she cannot refinance it. Like they don't have the ability to refinance. They don't have the credit. They don't have their, all that stuff. Got it. Understood. So then the only way to work is that Morby method strategy that I showed you, right? New loan plus seller carryback. But that means she has to receive nothing upfront to barely make it work and no monthly payments. If she's not willing to do that to avoid foreclosure, then I'm not the one to solve the problem. Try to just lower the price and sell it cash to someone else at lower cost. Maybe someone will buy it that way. Just drop the price. As a realtor, you should understand that, but that's why so many realtors screw themselves over and they screw the people that they're representing over because they don't give the advice of the price is too high or they're too emotional. And it's like, dude, you're about to lose everything. You're about to wreck your credit even further. Like, why are you doing all this? Why are you doing this yourself when you can cut your losses, move on to better investments instead of wasting your time and energy and money on something like this that can wreck you for the rest of your life? But that's that, y'all. All right. Thank you. If you want more access to all this good stuff, go to my Wealth of Real Estate community. I got it all for you. Go to my YouTube to check out more videos like this, really in depth. I don't think I'll ever go viral, but you guys will get really great value and really detailed value in this kind of stuff. And if you want to learn more about investing, take advantage of Wealth of Real Estate. If you want to learn more about CoLiving, I got the A to Z CoLiving course for you guys at the lowest possible cost compared to anyone else offering CoLiving education and way better education, tools, resources for you on your CoLiving journey. And those of you that are existing investors that want to scale up and achieve financial freedom more quickly, I got the blueprint for you. Creative finance, capital raising, CoLiving. Come join me in the Super Investors Mastermind. Reach out to me if you think that's a good fit. Later, y'all.